Question number 2, ITI Paper 2 Examination 2010. The unexpired portion of capital expenditure is shown in the financial statement. As options are as a liability, option B as an asset, option C as an income, option D as an expenditure. So we observe quite a few things here now. There are certain terms like unexpired portion of capital expenditure. So unexpired portion is one concept which we'll have to discuss, capital expenditure is another concept, and financial statement. So there are three different concepts which we'll have to discuss, which maybe some people wouldn't have understood. Coming to the first one, financial statement. The usual financial statements are, the general financial statements used are, point number 1, income statement. Earlier it was called profit and loss account. Second one is balance sheet. It was called balance sheet. Now it's called position statement. Point number 3, the third financial statement is cash flow, which is not mandatory. And the fourth one is notes to accounts. These four of them put together is called financial statement. But for our purpose, for this particular concept, we'll be using only profit and loss account and balance sheet, only these two items. So financial statement means profit and loss account and balance sheet. I've used the horizontal balance format of balance sheet, the old one, which is easy to understand and learn. For this purpose, we'll use financial statement of P&L and balance sheet, old format. So we know what is financial statement now. Unexpired portion, capital expenditure. Next one, we'll think of capital expenditure. Capital expenditure means we have our profit and loss account for the year ending, and this expenditure, what we see on the debit side of our P&L, the debit side of P&L is called revenue expenditure. These expenses are, the benefit of these expenses are fully received in the current year only. This expenditure, we are going to receive the benefit. That means we are going to receive the benefit here, revenue. We are going to recognize revenue here. For this, earning this revenue, we would have spent some money. So this expenditure and revenue are matched on a 1:1 basis in the same year. That's why we have that accrual concept. We recognize the expenditure for this particular year. So it is revenue for a particular year and expenditure for a particular year. So revenue expenditure, that is the benefit of this expenditure is fully received in the current year only. There are certain expenses where the benefits are received in next few years. So balance sheet shows us fixed assets. Fixed assets are also called as capital expenditure. Here the benefit of this expenditure is received over many years. So we get the benefit not only in 1 year, repeatedly over a few years to come. So that is called capital expenditure. Revenue means which we incur and take the benefit the same year. Capital means we take the benefit in a few years to come. So what we do here, the proportionate portion of the expenditure which we allocate to this block on a piece-wise basis and we put it here, that's called depreciation. Depreciation is the wear and tear or use in a particular year. Every year we depreciate the assets. Fixed assets which are not depreciable are land and goodwill. They do not have that wear and tear concept. So this is brief about what is capital expenditure. So now we know what is financial statement. We know what is financial statement. We also know what is capital expenditure. Now we'll go to the unexpired portion of capital expenditure. Unexpired portion means, here, let us take an example. A vehicle which costs 5,000 rupees and has a life of 5 years. Depreciation formula is, depreciation per annum is cost of the asset divided by life of the asset. If the cost of the asset is 5,000 rupees and life is 5 years, like how is given in the problem, then depreciation per annum is 1,000 rupees. Every year we are going to utilize 1,000 rupees worth of the asset in that particular year. So to put this in a problem form and see how it appears in the profit and loss account and balance sheet, so we have taken year 1. Year 1, in the first year, how will it look in our profit and loss account and how will it look in our balance sheet? Balance sheet, this 1,000 rupees, 5 times, this 5,000 rupees each block over here, 1, 2, 3, 4, 5, there are 5 blocks here. Each block represents 1000 rupees. So totally there are 5 blocks, 5000 rupees is the amount. This shaded portion, red portion, is the amount of utilization of the asset in 1 year. That represents 1000. So this 1000, this piece we pick up and we drop it here. So this 1000 is the worth of utilization of this asset in this 1 year, so that we are going to put it here. We are going to recognize that amount of expenditure in this particular year. So in this year, year 1, we have utilized 1000 rupees worth of this fixed asset. So this 5000 rupees gets reduced by 1000 as depreciation, and the carry forward amount 4000 is called WDV, written down value 4000 is carried forward. So this of this 5000, 1000 worth of expenditure, 1000 worth of the benefit of this asset is picked up and put over here. Similarly, we are going to go to the next year. Second year, year 2, this amount 4000 is the what we have here. This 4000 comes down here. We have got 4 blocks. Of that, one portion 1000 is put over here, like how we did here. 1000 is put here, and our written down value comes down to 3000. Similarly, we keep doing this till we come to the third year. WDV becomes 3000, comes here. Then this 3000, what we have here becomes 3000 here. This 3000 is, we are going to pull out 1000 and put it here. So we have 2000 left. This 2000, we have got 2 pieces. This 1000 we are going to pull out and put it here in the 4th year. This exercise continues. In the 5th year, we are left with only 1000 rupees. We have pulled out this, we are left with 1000. That also we are going to depreciate and put it in the 5th year. So we are left with 0. Now coming back to the depreciation part is over. Unexpired portion of capital expenditure. All this is capital expenditure. All the assets are capital expenditure. Unexpired portion, this one. 4000 is unexpired portion of capital expenditure. 3000 is unexpired portion of, so all this are shown in the asset side. This unexpired portion of capital expenditure, this 4000, 3000, this WDVs are unexpired portion of capital expenditure. They are shown in the asset side. So the answer to this is the unexpired portion of the capital expenditure is shown in the financial statement as an asset because it is shown here. This 4000 is shown in the asset side. This 3000 is shown in the asset side. So with that, we have completed problem 2.